And so this might have been the whole goal of this is to go, well, there's products that I've licensed the ability to make a lot of money and create some cool stuff and help people. That's what I want you to take away this call from. So I asked Drake to compile 2 different hypotheticals, which would be the most common situations you'll see. So, okay.
Okay, cool. So at this point, I already feeling pretty good about the awesome client. Number one, 49-year-old male. He made it pretty clear that he's just looking to do cash accumulation, and he's in California and he really wants living benefits. So this is pretty simple. Those of you that aren't familiar with NLG should become familiar with it. There's a lot of great stuff out there.
Touch on living benefits real quick while you're going through this.
What?
Give a living benefit pitch real quick while you're going through this.
I'll give that pitch when I show you the illustration. I'm not giving it all away.
I'm going to stop talking right now, Drake. You're in charge. Okay, I don't want to get yelled at anymore.
So minimum death benefit, max cash accumulation is pretty much what anyone who's really interested in IULs is going to want. You really would only jump between balanced death benefit based on target premium if it was a really good client that needed the living benefits and really wanted this product and they were on a real tight budget. Protection focus is just going to jump it to like $1 million policy, and it's going to add a fat like 350, not really a rider, but just protection focused. So minimum death benefit is kind of where I'm always at, or balanced death benefit. So minimum death benefit is the most common I see. And then most common is monthly. When you go to the specify amount or solve type, just leave it none and just put in what their budget is. So this is really important, is, what I've identified talking to the client, because this is an illustration, right? This is not submitting. So they don't even see this. Even though I'm on Crankwheel and I can show them the data entry, I don't actually show them the illustration first. I show them where I'm putting their driver's license, their social. And I start with the address because it's the least of all evils that they're going to give to you right away. So they can see my screen on Crankwheel, doing the application, put in their address like it's no big deal. What's the social? Okay, great. I don't even need the driver's license until the next consent form. So just being very creative about the way you do it. But long story short, most common I see is about 10 times their age or more. A lot of guys are doing about $1,000, $800 to $2,000 a month, depending on what their goals are. But you want to know what their budget is and uncover the money. It's so important. I can't tell you how many I get qualified, and then they come back and they're like, oh, but I have this much, or oh, I had this happen, or oh, that was my bonus next year. So identify it as soon as possible so that you can start with the right amount.
How do you do that?
Well, for me, identifying it is, doing the old banking trick. So, okay, so you have Chase. That's great, Grady. So do you keep FDIC money over there? What do you ballpark keeping there on any given Thursday afternoon? What's your average balance? To make something up.
$2,000.
Okay, great. And then do you have a 401k that you're currently participating with your current company?
Correct. Yes.
Okay, great. And do you have an old one from your last employer?
No.
Okay. And what credit union are you using?
I don't use a credit union.
Okay. And you're using Chase, so I'm assuming you have B of A, Wells Fargo, US Bank, Citibank. Which other ones do you have credit cards in your wallet or debit cards right now?
Capital One.
Okay. And is that a checking or savings?
Just a credit card.
Okay. Well, you're a rare animal. And then immediately also, so your 401k, do you know who manages it?
Principal.
Okay. And do you have your own investment account there as well?
No.
What about Schwab?
No.
Smith Barney?
Do you want me to be rich, or am I being? See, this is why I don't role play, China, because I don't know how to answer correctly.
No, it's okay. It's a great example because a lot of people will say no at first until they get warm and fuzzy to you. But the rule of thumb is your budget was low, $2,000 on an average amount. But anybody that has more than 10 grand on average, they have probably 2 of the 5 big banks. So Citi, B of A, Wells Fargo, JP Morgan, US Bank. That's an automatic rule. Everybody has an online bank or a free bank or a credit union, and almost everybody's got Robinhood or some type of investment account. That's just part one. but you have to say the names of it to them, like assume it.
Got it.
What credit cards do you have? Assume they have a bank account at least 2 of whatever companies they have a credit card at.
Okay.
That's where you find the money. And then also, how much is your house worth? If you were to sell it, what would that look like? Oh, okay. So then, you know, is that your largest asset? Hinting. Oh, it's not. Okay. So you have to find the money. And then also, what industry do you work in? Sales. Oh, great. So you get quarterly bonuses. Are those controlled by how much you sell or by the corporation? Can they change anytime? And then I always say, well, how much cash do you have in the gun safe or under the mattress? Every
Okay.
time. Every time.
The goal
That's how I find the money. That's how I
Gotcha.
did it in 2004 at Wells Fargo. I do it the same way now.
And your goal though is to find out with a comfortable monthly payment number though. Yes.
Yes.
So did you pick 1,000? Did they pick 1,000? Did you back them into the corner?
No. I would do a financial review based on what I learned and based on how sketchy or confident they are, and if they're a homeowner, what kind of car they drive. This was based off of this. This is the average that I'm seeing for blue collar folks that are between
That's what we're
49
getting.
and 55. Yeah.
Got it. All right, keep going. I'm gonna stop talking.
Okay. So yeah, so put the dollar amount in there. Very cool. Very, very simple. Like when you're on with the client or you just want to fact check yourself really quick, you always look at year 11. So year 11 right here, they're going to be, making their money back in their accumulated / surrender value. So right away, Mr. Customer, you got a $555,000 of living benefits or death benefit, but God forbid you get sick and live, right? Now, what I'm going to do is I'm going to toggle over awesome customer number 1.
All right. So now we're looking at a client-facing illustration packet.
Right. So going back to this really quick, there's puzzle pieces. One thing I like about National Life Group, if I die too soon, become ill, live too long, I really don't go too deep onto this at all because it's all changes based on age. So people see this, I'm just like, hey, if you get hit by, a car tomorrow, your wife's going to be left with this money. And then if you look at this at these ages, you're going to have this accumulated value that you can borrow against. I just touch on it. We'll circle back to that later. This is the part people are the most interested in, is the terminal illness, chronic illness, critical injury, critical illness, and then Alzheimer's, which NLG is known for, which is amazing because it's happening to so many folks, men and women. But going back to where I was telling them they broke even at 10 years, so we can put this in layman's terms, I'm just going to pass all this stuff up. I've watched Juan, Zach, watched numerous people do these, and none of it they go through. First of all, you don't have them approved yet. Typically, I won't even do this illustration until after I've done all the data entry on the other screen. But just for sake of time and for teaching folks,
We appreciate you teaching us.
I don't know how good of a teacher I am, but I'll try.
Hey,
More of a whip cracker.
take it.
Follow if you dare.
Blood, water, oxygen.
That's right. Okay. So we'll just go right here really quick. So this is a hypothetical, 20-year historical data. And the only part that's going to really make any sense to you, Mr. Customer, is this 5-year average is 14.19, 10 years, 12.6, 15 years, 14.21, 20 years. So you get the point. So you see this 6.44, right? Yeah. Well, that's because we want to shoot for the moon, land on the stars, right? Or land on the moon, shoot for the stars. So we want to under promise, over deliver. So we can't illustrate higher than that. But you can see without 9/11 in the 20-year historical data, this is basically what this illustration's done. But this is what we're going to show you it's illustrated at. So now if I go back to this one and you look at that 10-year mark or 11-year mark, when you're like, hey, you've put in 120 and you've got 130 in your surrender / bank account value, but that was illustrated at 6.44. What was the 20-year historical average there, Grady? 14.9?
Mm-hmm.
Okay, great. So just to keep that in mind, we're going to under promise, over deliver. Does that make sense?
Yes.
Perfect. And then you just toggle back and forth. So anyone who's not familiar, if they want to change the dollar amount, you would just go right back to quick view. For this, I didn't do that because there's just really no need to. All these different riders, they can go on for days. Again, the people who taught me, don't touch any of them. You just don't need them unless there's something very specific. And if they do, get on the phone with NLG and see why. Literally just with these 4 clicks, you can fully illustrate everything you need. And then it's just going to automatically populate that beautiful report we were just looking at. So we'll come back over here real quick, and I'm going to show it to you a little prettier. Okay, here it is. Cool. So, Mr. Customer, this is you, Mr. Awesome Customer number 1. This is year 10. We just talked about 120 in. Shows you clearing that at year 11 with 130 in your bank / surrender account. Because remember, they're a life insurance company, not a bank. So they have to say cash surrender. But if you cash surrender, that means you get capital gains. So we're going to recommend that you always borrow against yourself. Does that make sense? Oh, yeah. Well, that's what I was interested in. Good. So from this point, I'll usually highlight for the client, say death benefit / living benefit, focus on that. Every time I say cash surrender, I want you to think about be your own bank and borrowing from yourself. And accumulated value, I want you to think about as this company's indexing your money for you, regardless of the market conditions. So you're at 0 risk of losing this column. Does that make sense?
Sure.
Cool. So year 11, let's say you borrow 120, you've got 10,000 left in your bank account. Your accumulated value stays the same and continues to grow. If you pay that 120 back in the first year, it's like Amex. There's no charge. It just goes back in there and keeps growing. 365 days past day 1. Or you could take a fixed loan at 5%. So Grady, if you're borrowing 120 at 5% and you're indexing at 6.44, how much are you borrowing? What's the cost on that percentage? 1.44, right? So if it's indexing at the 20-year historical information that I showed you between 12 and 14.9, how much are you paying on that loan?
Not good math. Help me out.
Are you following me? Nothing. Okay, so let's say, Mr. Customer, God forbid you borrow from the 120 out of the 130 and you die that year. What's going to happen is that's going to come out of your face value that you're leaving your wife. There's not going to be any capital gains. You're not going to pay any fees, and your wife's still going to get the remainder of that death benefit. Does that make sense?
Mm-hmm. So do we take? When do we start taking income? You're pulling it out of the.
That's the other scenario, Grady. You asked for the most common. They don't even want to see that. So here's why. So for this example, a 45-year-old male, when you start taking income, and it'll make more sense when I show you the other one. But if you look at this one, when he's 64, he's put in 240, he's got 351, and that's on the low side. Okay, so if he still pays it, it's still growing. So do you want to see 20,000 a year tax-free income, or do you want to see $500,000 growing in your account that you can borrow against? Most people want to see how much it can do. Of course, when they're approved, when I have them log into the NLG app, which I've shared with them from my phone, and I'm like, you're not signing in. We're actually going to register you with your social now that you've paid your first premium. That's where the secret sauce comes out, and I show them the controls in the palm of their hand. I don't do any of that until it's approved and they've actually paid their first premium. It's just too much work and takes too long.
Sure.
Okay. So that's why this one is built this way, where he's paying it for the rest of his life, because when he's 85 years old, he's put in $500,000, but he's got 1.7 in there, and his death benefit's now 1.8, right? So it's still, you can't get that kind of return. It's very risky to try to get that in the stock market or anywhere else. Does that make sense?
Yes.
Cool. So what questions do you have about this one? Then I'll go to the other illustration.
No, just for time, let's jump to the other one and show that one real quick, because that's the one that gets me excited. I do like seeing $500,000 sitting in that account, but I also like, tax-free retirement income that you can mentally as budget against in the future, which I think that's.
So watch when you see the difference. Awesome customer number 2. Okay, so This is a 39-year-old male who wants to see what the income looks like. So 6,000, so $500 a month. So see the difference right here. When he's 65 years old, he stops paying it. So he's got 393 of death benefit, living benefits, and he's got a cash accumulation of 327. So 22,000, right, a year, and it goes up. But take a look at how much it goes down. So when this guy's 80 years old, his death benefit's gone down to 232. So for a younger person, it makes more sense. But when they're already in their 50s, it drains their death benefit fairly quickly because the cost of insurance is pretty expensive.
Got it.
And them taking this automatically every year is going to drain the death benefit significantly. So I've done quite a few different illustrations, and I've called 100 times in the last 3 months and had them walk me through it. It's the only way you could get good at this is just, I don't know how to do it. Tell me, show me, and do it over and over and over and over again, like I did with F&G for 3 months. I choose this system. It just tends to work the easiest customer facing for me and for my clients. If you do the math, so we can jump into the illustration. It'll show you exactly how much they get back. But you look at when he's 85 years old, his death benefit's gone down. So if it's somebody who's not leaving any money to their family and they're well off and they're doing tax avoidance in a way, or they're just looking for tax-free income and it's just for themselves, then it makes sense. But a lot of the folks I see do want to leave their legacy going forward, and they don't need this amount, but they want the option to borrow it if they need it.
Options. That's the key word. You got options. They want a lump sum. They want tax-free retirement income. They want living benefits. They want a death benefit. We can structure something in place. And I love that you've chosen. I love that you like NLG. NLG's a phenomenal company we have a great partnership with. We got a lot of great IUL carriers. Pick your favorite and just build a relationship with someone in the home office. They'll support you continuously. Awesome. Any final thoughts as we close this out, Drake?
Nope. Any questions, Grady? That's the majority of the sauce.
Jay had one question, said, if you get them on the phone, how comfortable are they running through illustrations on their phone screen?
Use Crankwheel. If you're not using Crankwheel, I highly recommend it. It's more friendly than other share platforms and faster.
Nice.
So, like I said, I ultimately want to get the data collection first and make a recommendation based on what comes back. So I typically won't even make a recommendation till after they've done the first acknowledgement form and the second one. So the HIPAA and the submission request.
Got it. So guys, this is heavier class. This was a 304 IUL. There was some heavier, thicker stuff in here, which you get to, right? We all start college at English 101, and they make you write a 5-paragraph essay on Frankenstein. And it's probably longer than 5-paragraph essay, but that is where we start. That's whole life and term. And this is something where Drake has gotten himself to. As you heard him say, he knocked out 90 or 100,000 in his first 3 months. Well, his first month was like 12, and his second month was like 30, and his fourth month was like 50, or third month, whatever the math. But you get better, right?
Grady, my first 15 days was 27. My second month was 24. My third month was 59. Sorry, a little correction on that.
Stat correction. Thank you. We got Stephen A just popped in for a stat correction right there. So we appreciate that. But regardless, wherever you are, like Drake is just, there's only so much we can cover in so much detail that you're putting through when getting feedback from a client. IULs, guys, are a fascinating, phenomenal product. I own 6. I have 4 children, and I have a wife, and I have myself. So I have 6. We're big proponents in it. I put a lot of money away each month. I believe in the product. If I die, my wife will be very well off. So, go hit her up for something. But I got a lot of life insurance, and I'm a big believer. And my opinion of it is neither here nor there. But this is a great asset to your business as a business owner who has a life insurance license. There's only one person on the phone when you're calling your leads or with your meeting with your clients that has a life insurance license and is a life insurance broker, and that's you. And so this might have been the whole goal of this is to go, well, there's products that I've licensed the ability to make a lot of money and create some cool stuff and help people. That's what I want you to take away this call from. Whether we're doing whole life and term, getting started, we're moving into IULs and annuities, wherever you are, we're excited you're here. Drake, final thoughts. What are your goals? I'm sure you got goals galore. Is there a year-end goal you've got? Is there a next year goal? Is it a team goal? I need a couple goals stated that we can reflect back on.
It's a team goal. So our logo, which hopefully is approved this month, since I'm a team of two or three now, but two producing for F&D Financial Solutions, which is Francesca and Drake, right? Our goal is to do 4 million next year.
4 million issue paid.
Mm-hmm.
Is there a blend of products, or is it all IULs, annuities, both?
No, absolutely. It's simplified issued all day, guaranteed advantage all day, and these as much as you can possibly do. It's really sell what they qualify for, but sell something, right? Because we're taking care of someone, so they had a need, help them.
Amen, bro. It's a great mindset. Drake, I appreciate you so much. Take this for what it is, but I'm beyond proud of you of what you've done here and what you're doing and what you're continuing to do and the life you're building for yourself. So it's incredible to get to work alongside you. These aren't average and ordinary numbers. These aren't common man numbers. They are absolute elite producer numbers. It means you're helping a lot of people and you're taking care of your own family. So proud of you, proud to work with you, and excited to see what you do now here into the future, bro.
Thanks, Grady. It's a pleasure to be here, really.
All right, bro. Talk soon.